Airbnb reported earnings after the market closed on Tuesday, and there weren't any major surprises from the company. Continued to have a lot of growth. There was a big tax expense related to some Italian tax challenges. Evasion is what the Italians would probably call it. And so that really hit both cash flow and then also net income. But overall, I think it was a good quarter. It was a step in the right direction. On the conference call, CEO Brian Chesky talked a lot about the fact that if we can just convert 10% of hotel stays into Airbnb stays, we could double the size of this business. Gave a little bit of an indication how they're viewing artificial intelligence and how that could build this into a platform company. So get a little bit into that today, but we'll supposedly get a lot more details about that later in 2024. Chesky has kind of been putting off what the next step is for Airbnb for quite a while now. It seems to be excited about whatever it is they're building, but it does always seem to be a little ways in the future. But today I'm going to focus on the numbers and then what the market seems to be reacting to after results were announced. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to the report. Now, this is the shareholder letter. The year-over-year numbers is really what you want to look at. There's a lot of seasonality in Airbnb's results, so can't really compare this to a quarter ago necessarily. Want to look at what those year-over-year numbers are, and then I'll give some context to why some of these numbers are negative or a little bit lower than what you might expect. So revenue of $2.2 billion in the quarter, up 17% year-over-year, 14% excluding for foreign currency changes, up 100% over the past 4 years. So they are giving a little bit of context to what happened since 2019 or before the pandemic. Now, this growth rate has been higher recently coming out of the pandemic, but I think we're in a little bit more of a normalized place right now. Maybe you can't expect Airbnb to grow 20, 25% every single year, but in that mid-teens range, that's going to be a really nice growth rate for them, considering the amount of cash flow that they have. Net income, negative $349 million, and what you need to keep an eye on here is approximately $1 billion in tax withholding expenses and lodging tax reserves. Most of that is associated with the Italian tax case that was resolved in December, and that resulted in $620 million to settle that specific case. And then they talked about putting themselves in a much better position in the European Union to collect the appropriate taxes on behalf of hosts, which then go to the country which is collecting those taxes. So Airbnb kind of plays that middleman role from a tax perspective. Adjusted EBITDA, which takes out a lot of these one-time costs associated with taxes, $738 million. And you can see for the full year, $3.7 billion. This is up really sharply from $506 million a year ago and negative $276 million 4 years ago. So this is part of those financial improvements that Airbnb has made over the last few years, getting a lot leaner as a business, and now generating much better cash flow and adjusted EBITDA, at least on a normalized basis when you don't have some of these one-time costs. Free cash flow, $46 million. This was positive despite the fact that they put away a lot of money related to the Italian case. Gross booking volume. So this is going to give you an indication of what the future is looking like for Airbnb, $15.5 billion, up 15% year over year. So we're still in that kind of mid-teens growth range, and that's consistent with where they've been for the past year, up 16% for the full year. And nights and experiences booked up 12% to almost 100 million. So really impressive numbers, I think, across the board. Obviously, investors are reacting to what analysts were expecting. These numbers are a little bit better, but it does seem like the stock is falling, at least after hours. I'm recording this late on Tuesday night, and at least after hours, the shares are down about 4%. So don't be surprised if we see a continuation of that on Wednesday morning. They often talk about the supply side of the Airbnb business. Remember, you have to have people on the demand side who are actually booking rooms, and also you have to have supply for Airbnbs. So one of the things that they cover oftentimes in these shareholder letters is how many suppliers that they have. And so they have 5 million hosts around the world, exceeding 7.7 million active listings. So and that was up 18% from a year ago. So this is what you want to see, is an increase in the number of listings and available supply on the market. They also said that the average price of an Airbnb stay went down. Ironically, this is what you want to see if you are an aggregator like Airbnb. You want your supply to go down because you're a platform and you're able to leverage your business across millions and millions of hosts. So you want to have the lowest cost possible, the lowest barrier of entry for customers who are actually going to be staying with you. Ultimately, that's going to lead to higher revenue and higher profitability long term. It's a little bit counterintuitive. A lot of hotels, you want to see the price go up because you're constrained by the number of hotel rooms you have. Airbnb isn't constrained by the number of hosts that it can possibly have on the platform. If it has more hosts, it can make more money. So the fact that the fact that nightly prices are coming down is actually a positive for the business. The other thing they talked about was expanding beyond the core. They didn't get a lot into exactly what this means. Part of it is going to be expanding to more countries. So this is countries like Switzerland, Belgium, the Netherlands. But the other thing that Brian Chesky talked a lot about is using some of the new tools like artificial intelligence to become more of a platform company. So basically said they wanted to be your travel concierge. So that seems to be what they're building for later in 2024. Maybe getting to the point where where Airbnb can know what kind of vacation you would like to take, who's coming with you, what sort of amenities they need, and be able to build that all out in a single platform. It seems like that's the direction that they're trying to take the company. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The other thing that we need to appreciate is sitting on an amazing balance sheet. Not only did Airbnb generate $3.8 billion worth of cash during 2023, they also have $10.1 billion worth of their own cash and $5.9 billion of cash being held on behalf of customers sitting on the balance sheet collecting interest. And that is money that Airbnb gets to keep, a little bit like a bank. They get to keep the interest that they're generating. So higher interest rates means higher interest income from Airbnb. In the fourth quarter of 2023, Airbnb generated $192 million in interest income. So that's a massive tailwind for the company. They are also buying back shares. A little over $2 billion was acquired during 2023, $750 million in the fourth quarter, and that will continue into the future. So add all of these things up, and I think it's just steady improvement for Airbnb. This is a platform company that continues to grow. Yes, they're going to have challenges keeping their market share and growing market share when companies like Booking.com and Vrbo are trying to get into this market and build the kind of business that they have. But I think that mid-teens growth for Airbnb in the current market environment is really strong results. We're seeing more supply come onto the market. Those prices are coming down. That makes the product more attractive. And then the long-term upside is that this becomes even more of a growth and cash flow story as you get tools like artificial intelligence building out this concierge experience. So this is going to be the thing to watch for 2024. Is Brian Chesky able to transition the company to a new artificial intelligence platform? He talked about that on the call, that these paradigm shifts from the mobile paradigm to the artificial intelligence paradigm allows new business models to emerge. Can Airbnb transition its business model from growing up with mobile to whatever this artificial intelligence products and paradigm that potentially is coming? Can they make that transition? And that's where you're betting on a founder and a CEO like Brian Chesky, but I think he is one of the biggest strengths for this stock. And so that's why not only is this a phenomenally run company, the existing business operations, but also I think if anybody can make a transition to a new artificial intelligence travel concierge model, it's somebody like Brian Chesky. So overall, the market may not have been impressed with these results, but I'm a long-term investor. I'm thinking about what is this company going to be in 5, 10, 15 years? And I just think this is the kind of company that you want to own long-term, ride through those ups and downs, use any drop in the stock as a buying opportunity to accumulate more shares and just allow management to do what they do, because this is one of the best companies on the market today. It's trading for a reasonable valuation, given the cash that's on the balance sheet, given the free cash flow that they're generating, and you have a ton of upside if they're able to execute some sort of travel concierge business model. But what do you think about the results from Airbnb? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.